This episode of It's Your Call is one of a series dedicated to facing the mortgage crisis in Southern California, brought to you with the support of the Corporation for Public Broadcasting. Good evening, I'm your host, Roger Bowman. Tonight, along with foreclosure prevention, we'll be delving into what happens after a foreclosure and whether you can ever buy another home. Our guests this evening are from the Fair Housing Council of Riverside County. They are Lisa Jarman, Foreclosure Prevention Program Manager, and Jesse Limon, First-Time Home Buyer Program Manager. If you have any questions for tonight's guests, please feel free to call. The phone number is 866-367-5827. Thank you very much for being here. Lisa, let me start with you. Tell me a little bit about the Fair Housing Council. What is its charter?
Fair Housing Council is an anti-discrimination agency, and its mission is to fight for fair housing rights for all persons, regardless of their race, ancestry, religion, marital status, or any other arbitrary factors.
So, before this bubble burst, it sounds like what you did was you advocated against redlining.
Exactly.
Tell us a little bit about what redlining is.
Redlining is when certain groups are targeted for certain types of loans or targeted to live in certain areas of the community. It's a discriminatory practice, and it definitely what's happening in our region and all throughout the nation.
And before we get into foreclosure prevention, staying with that a little bit, who would be targeted in the Inland Empire, Southern California, LA regions?
You know, there are various types of groups. Young couples, Hispanics, African Americans, senior citizens, people that have English as a second language. Various types of groups are targeted, not just one. But if a home loan was easy to obtain, then it's a great commission for the originator, but for the person that was buying the home, they ended up with a bad loan.
So is it fair to say that during the bubble, the discrimination didn't manifest so much as prevention of a loan as much as it did a predatory loan or a loan that had usury terms? Is that fair to say?
I would say that these were loans that were predatory in nature, and when groups are targeted, usually it's because of a very creative type of loan that wasn't designed to keep the homeowner in the home for the term of the loan for 30 years. Many of these were loans that had features on them that increased the interest rate, had enormous fees or prepayment penalties. They just weren't loans that were designed to help homeowners stay in their homes.
And Lisa, you work not so much in the department that prevents the discrimination, but in another department. Tell us about your role.
A Fair Housing Council actually has a variety of services. One of them, which is foreclosure intervention and default counseling, the first-time home buyer program, landlord-tenant discrimination hearings and special projects. So I manage our foreclosure prevention program to help homeowners address programs or access programs with banks and servicers so that they can get a modification on their loan.
Great. So you're somebody we definitely want to talk to. Jesse, tell us about what you do there.
Well, I'm the first-time home buyer program manager, where I educate homeowners on the process of purchasing a home the right way. I started as a foreclosure counselor with Lisa, and noticed that there was a trend with a lot of homeowners that I was giving foreclosure counseling to, and that is people saying, you know, I just didn't understand what I was getting myself into. I didn't understand this loan, or I was told I was getting a 30-year fix, and at the last minute they told me that it was an adjustable rate mortgage, and I didn't know what to do. They told me to sign it. So what we do at our first-time homebuyer workshops, which are 8-hour workshops where we teach homeowners the fundamentals of purchasing a home, we address those issues and really teach homeowners how not to become a victim of these types of predatory lending and how to get into a home responsibly.
Would you say that demand for that workshop has increased and the need for it has increased since the bubble burst?
It has. It definitely. It was a slow thing. We've been doing first-time homebuyer workshops since '96, I believe. And when I started with the agency, which was about almost 2 years ago, we were doing first-time homebuyer workshops where we would get anywhere from 10 to 15 people in a month. Now we've expanded our program after these homes became more affordable due to this foreclosure crisis. First-time homebuyers started getting out there after a lot of cities and counties implemented their down payment assistance programs, and we started noticing our numbers increase. We now have workshops where we have an average of 45 to 60 participants every 2 weeks. So the number has grown quite a bit.
And I don't want to overgeneralize, but it does seem like the need or the perceived need from the general population of a first-time home buyer workshop back when the bubble was really at its apex would be pretty low. I mean, it seemed like a rootin' tootin', let's go get loans time, where you had an agent that you trusted, you had a broker and a lender representative, and you felt like you were in good hands, and they advised you this is what you should do, and everything seemed legitimate, and you trusted those people. And now, is it fair to say that that trust has ebbed? The trust is even gone now that people know that these loans have exploded on them? They don't take what they're told at face value, and they want to get into those programs?
I would say it's a combination. That definitely has a part of it. Just, homeowners want to know what's going on, and that's really what we focus on in our workshops, is kind of give the insight on, why a realtor might be asking you a certain thing or steering you a certain way. I shouldn't say steering you, but maybe posing questions in a certain way or putting you in a certain type of house. So we educate them on the role of a real estate agent, the role of a lender. We let them know how to qualify themselves. So there is a little bit of that, but as much as I'd like to think that the homeowners are coming to get that educational loan and hear me talk for 8 hours, that's not always the case. They come to the workshops ultimately to get a certificate. Once a homeowner completes our first-time homebuyer workshops, they get a certificate that they have completed an 8-hour HUD-approved housing counseling class, and that enables them to go out and apply for down payment assistance programs, which have become very popular.
No kidding. So kind of like the classes that I remember when I had to get a driver's license, the DMV required me to take driver's education. In this case, the federal assistance programs require that somebody goes into, in this case, an 8-hour workshop, and I imagine 8 hours would arm them pretty readily to go in smart into the loan process.
Yeah, that's the idea. The idea is just to, it's a lot of the government money that is really what it comes down to. And they have put something in there and saying, hey, if we're going to be given this money, we want to make sure it's done responsibly. So we really stress in our workshops the importance of getting a 30-year fixed mortgage, the importance of budgeting, the importance of managing your credit and addressing credit issues. So we really get down to the root of what stops a lot of people from home ownership. And we do get a lot of people that are successful in going into purchasing a home, but we also get a lot of people that aren't quite there, and they just wanted that education, and we give them the tools they need to get prepared to go into home ownership.
Okay, so I'm going to take our first call. We have foreclosure prevention specialists here, so I know that we're going to get a lot of questions tonight. Let's go out to Palmdale. Margaret, you're on the air. It's your call. Margaret, are you with us?
Yes, I am.
What's your question, Margaret?
Yes, I purchased a house in '05, and when I went to the real estate agent, they knew how much money I made, and I told them, and I thought that was going to be my payment. I had a fixed amount, each month, because they knew how much I made at that time. So next thing I know, about a year later, here comes this $800. They told me $800 some dollars more. I also thought there was a tax, and all the property tax was included. But anyway, about 3 years after I got in the house, which was last year, that's when I started having trouble, because then that's when the payments went beyond my ability to pay. So I hired this lawyer down on Wilshire, and they agreed to rewrite the loan. And he's a witness to this and everything. So,
Margaret, did the person who agreed to rewrite the loan, was that the bank or was that the attorney?
That was the Chase. He was on the line. They called his office, and they gave the phone to me, and they told me that it would take about maybe 4 to 5 weeks before they could do it. Next thing I know, I get this paper on the door, stating that Chase had bought the home. I also was advised to file a foreclosure, a bankruptcy to stop the sale of it. That messed my credit. I had A1 credit when I got the house, perfect credit, no problem. And now I'm paying the credit cards.
Margaret, summarize for us your question. What exactly can they answer for you?
What's that?
Summarize your question, Margaret. What exactly can our specialist answer for you?
What can you answer for me?
Yes.
Well, I want to know, is there any kind of help I can get? Someone told me there's a possibility I could get my house back. Now,
okay.
I haven't read that or heard it from.
Good question, Margaret. Okay, so did you catch most of what she was saying? She engaged in the loan modification process.
Mm-hmm.
She was told verbally, it sounds like, that she had the loan modification in place, and then she found that she was in foreclosure.
But she still owns the house.
It sounds like she lost the house.
I took that she lost the house.
Okay.
And based on the fact that she was previously told that she would get some form of a modification, that she'd like to know if she can use that as a mechanism to get the house back.
It's unlikely. Once the house goes to foreclosure, it's pretty much set in stone. The house has sold, it's transferred. Unfortunately, that's just the way that it works. Other than, I don't know if going to an attorney would be advisable, because I'm not sure what kind of luck they would get in actually getting that loan reinstated in their name. We get a lot of homeowners that have that complaint, and they kind of have that mentality of like, okay, you go to a Target and you see an item underneath the sign that says $14.99, but it was actually in the wrong place, and you could go to the manager and say, hey, you know what, I should get it for $14.99 because it's misleading, and you could do that in that kind of scenario. But when you're dealing with a bank, it's a lot different. There's laws, and there's a lot of money that goes involved. So if a customer service rep over the phone tells you a certain thing, it's not like you could go to that bank and say, hey, so-and-so told me this, so I want this to actually take place.
So Jesse, you're telling me there's no accountability?
No.
I'm putting you on the spot.
Yeah,
that's
putting me on the spot.
Know.
But yeah, I mean, once, depending on who they were talking to, if they were talking to somebody over the phone, let's say, somebody that calls you up and tries to collect a payment. Unfortunately, they do use tactics where they just say, things to make you make a payment, or maybe even scare you into making a payment, by scrounging up money, taking out payday loans, whatever the case may be. They don't really care as long as they collect a payment. So unfortunately, you really can't hold them accountable, or not that I've seen, in taking action on what they've said.
So what can somebody do to make sure that if they're told something, that it's binding?
I have to say it really does depend on that situation. If a homeowner has recently lost a home through foreclosure and they have documented evidence that they were going to receive a modification, utilize that attorney. That's what they're paid to do. They can fight your case for you. So I would say it depends on how long it's been. Jesse's right in that in many cases, when a home is foreclosed, title has been transferred. If there's a new owner in the home, of course, there's a whole nother set of issues. But if it's a very recent foreclosure and you have the evidence, and an attorney can work with you to show the lender, I have witnessed and seen where a foreclosure was rescinded because banks do make mistakes, and that's oftentimes why we're an advocate for homeowners, because banks make mistakes. We don't want to give a person false hope, but if they've done everything they can, at least they know they've tried.
And the key to, I think, what you said is if they have the documentation, if they have the evidence, you have to get it in writing.
Right, and oftentimes it's a matter of making sure things are documented when they talk to that representative on the phone.
Hopefully we'll get back to that. Mm-hmm. The techniques people can do to ensure that verbal commitments get documented. But I want to go out to another call. As I thought, our lines are almost completely full already. So let's go to Santa Ana. Katrina, you're on the air. What's your question?
Yes, I have a couple of questions, but I will make this very easy for your audience. If one has gone on to financialstability.gov, they've already been identified as a Freddie Mac type of loan. They want to do a streamlined refinance. That's low doc, based upon the equity of the 105%. They have a Freddie Mac type of loan. They call up their lender, and even though they have a Freddie Mac type of loan under the Obama plan, they are still not available for a refinance under the Obama plan, making home affordability. And unfortunately, there is no other options for a homeowner. What can one do besides doing a refinance, or trying to do a loan modification? Because this is where the Obama program is a joke and a half that only helps 5 to 6 million people in the United States.
Okay, good point. How would you respond if somebody doesn't qualify, even though they are federally backed, under the various criteria of the federal program what are their options? Will the banks have voluntary programs that augment the federal programs, or are they looking for soft landing alternatives?
Some of these banks have their own in-house programs, and these in-house programs will either mirror the program or will be a totally different program. It may be that they weren't prepared when they applied for the application. If they've not talked with a HUD certified and approved housing counselor who can address those issues knowing what the bank is looking for, then that would be something we would recommend. And then they may get a different outcome altogether. We have had people who've been denied various times for modifications, but have gone through the process of loss mitigation and through a HUD certified housing counselor and have found a different outcome. And sometimes, as I said, the bank may have an in-house program. It's important to ask, what do you have that I could apply for or could qualify for?
I know that one of the sticking points for a bank to make a modification, if it isn't assisted by the federal program, is whether or not they own the paper or whether it has been sold to, say, investors who have their own rights to deny modifications on those loans. Can you ask the lender or the servicer whether they own the paper or whether it's been syndicated out as one of those CDOs and whether they have the authority even to make the modification?
I always ask, once a loan packet or what we call a workout packet, all of the criteria that's needed for a modification has been assigned to what's called a negotiator, then we can find out who the investor is. But the investor or the lender pays the servicer to keep their identity undisclosed. It's not something that is public knowledge. It's not something that a rep will tell a homeowner or even a housing counselor when we first make that call. Of course, there's a website on FannieMae.com that you can find out whether your home is a Fannie Mae or Freddie Mac loan. But as a housing counselor, we also have direct numbers where we can call, and we do have to escalate it or wait until that loan has been assigned to a negotiator before we can find out who the investor is.
Okay.
You got to also keep in mind, you know, a lot of times the investor might, you know, a lot of people want to talk to my investor, but there are many times where the investor is not even capable of handling that conversation. They're an investor. They're just a big bank that doesn't know how to collect mortgage payments. All they have is a note and a deed, and they go out and hire a servicing company because they know that they don't have that as a specialty. So the key is to find out what the investor's guidelines are. And from the experience that we've had as foreclosure counselors, you could kind of get a sense of what, you know, investors' guidelines are. And it's important to teach homeowners that you have to fit into these investor guidelines as well as the Obama plan in order to qualify. We have foreclosure group counseling sessions where we go into detail in helping them understand why they may have gotten denied before. I've had plenty of clients who have been denied 4 times, and then they ultimately come to one of our workshops, address the issues that was stopping them from getting a modification, reapplying, and actually getting a modification.
You've had these successes?
Yes, I just had one last week where I had a homeowner who was denied 4 times. They were frustrated. I helped one of their coworkers, and he went back and told her, and she called me up and said, you know what, I'm just about to let my house go. I'm done with this, but you know, I just want to give it one last shot. You know, can you help me? And you know, when you hear somebody say, "Oh, my foreclosure sales, you know, 2 weeks out, it's August 31st," and they start, they're down on themselves, and I got to say, you know what, let's just start from the beginning. What caused your hardship? We identified that they had a legitimate hardship, reduction in income. Then we went into, okay, well, when the investor or when the servicer asked you this question, what'd you say? And then I started noticing that when she was giving, what she was telling the investor was really hurting her own case. So it's like a construction worker that would say, you know, I live in Southern California, the construction industry is horrible, I have no hope for work, and this and that, can you help me? You know, I've been unemployed for a year. Well, what you're telling the investor is that there's no hope for you, when you could just switch that around. You know, I have experienced a decrease in my income, I'm in construction, it's very tough. However, I am getting training at, say, the Economic Development Agency. I'm going through some classes to get a new truck driver's license, and I should get that in a couple months. Is there any way to postpone the foreclosure sale while I get this situated? So if you give them the situation and fit into their guidelines, you're going to have much more success. And back to the lady who I called up, I found out that the reason why she got denied was because she was really overstating her hardship. she was telling the bank, she thought that the bank wanted to hear that she was down and out and she really needed help. So she was, unfortunately over-exaggerating her expenses. She wasn't quite sure how to estimate her income because she was a bartender and her income fluctuates, so she was just giving their bare minimum. She wasn't counting her tips. And after we got her budget in order, we called up the bank, and I could tell you within 30 minutes of a phone call to the bank, just getting right through to the loss mitigation department, just giving the financial information. They say, okay, looks like you're a great candidate for the Obama plan. We need to get your payment down to 31% of your income, which their income was around $6,000. They dropped their payment down to $2,081 from $4,600.
$4,600 on a home PITI payment.
Yes.
Down to
$2,083.
$2,083.
And it's a trial modification for 3 months. They have to make this payment. After those 3 months, they're going to review the file and see if they can make that a more permanent modification.
Okay. Now, we have lots of callers. They've been holding, so thank you for your patience. We're going to fast fire through that. I didn't want to interrupt that one because that was a really good case example about the fact, and we don't hear this often, that you can try again and don't exaggerate your hardship. Otherwise, like you said, there's no hope. Let's go out to Ontario. Antonio, thank you for waiting. What's your question, Antonio?
Yes, I was listening to the conversation there, and I spoke to a HUD certified counselor, and I spoke to the loss mitigation department for my bank. My house had gone into foreclosure, and it was going to go up for sale. I was able to stop that by entering a forbearance agreement with them on a repayment plan. That has not expired yet, and apparently they sold my house to another bank, and I don't know what else. I don't know what to do. And I also received today a evacuation notice or
an eviction notice. Sure. Antonio,
yes.
Sorry to hear that situation arose. Mm-hmm. That's very similar to our first caller. Tell us about if, again, he was in the middle of what sounded like a forbearance, right, where they deferred some of his payment obligation when they apparently sold the home in a trustee sale. Is he in the same boat? He's probably not going to get the house back, and he just has to go through that eviction process?
I would encourage him to contact the name and number on that eviction notice, but it does sound like the house is sold. When you do receive an eviction notice, it will give you about 3 days to vacate, and then there's an asset manager and number on there to call to work out some type of arrangement in moving. Most lenders would have what's called a cash for keys promotion, where they will reimburse moving costs up to $2,000 if you have a housing counselor working with you. But it sounds like in his case that the house is sold because an eviction notice has already been sent.
Okay.
Unfortunately.
Sorry, Antonio. Let's go out to Valencia. Lynn, it's your call. What's your question?
Hi, I have a house. I have a first and a second. I had modified my first last year. My second, which is a line of credit, I tried to modify it back in January, and the modification was denied. My question is, for the last 7 months, I've been behind on my line of credit. I keep getting letters from the second saying that they're going to charge off the account. And obviously, there's no equity to support this line of credit. My question is, what options do I have right now? The line of credit is not willing, did not try to modify it back in January. There's no equity on the line of credit, and I keep getting this letter, but no action other than that has been taken from the lender.
And it was Ivan. Thank you, Ivan. I appreciate your question. I've seen this situation a lot. What would you respond, especially when the second is pursuing you more aggressively than the first?
We've seen this quite a bit, actually, and it depends on how long they've been in the foreclosure process. If Ivan hasn't already contacted his lender, it's really important to try to get a modification on the first mortgage, talk to a housing counselor, and we could use whatever help the first mortgage does as leverage for the second lien holder. And so it is a tricky situation, because sometimes the second mortgage will do that only because they feel that foreclosure is inevitable. But it's definitely worth trying. I've had cases before where there's two loans, and the second wasn't willing to do anything for them at all. But once they found that the first mortgage holder was willing to review their file for a modification, it changed things with that second mortgage lender. So it's definitely, I would encourage him to definitely try to see if he can get a modification on the first mortgage and have communication start through the third party of a housing counselor through the agency. And that may make a difference.
And Lisa, isn't it true that recently the federal government amended their federal program to include seconds, where initially they were omitted,
exactly.
and that excluded a lot of people with seconds.
Exactly.
Now they're under the umbrella and can look at doing a modification.
And that's very good news. We've had modifications at the spur of the moment, if you will. I mean, just yesterday I was working with a lady whose house is going to sell on Monday, and sometimes the servicer, if they know that you've contacted a HUD-approved and certified housing counseling agency like Fair Housing, then they'll begin to open that file up and wait for us to get the paperwork to work with them. So we just can't stress enough to contact us for help or contact that housing counseling agency in your area, because that could make a difference. For Ivan, it may make a difference if you take that call.
I'm going to jump out to another caller, and let's go out to, in this case, Moreno Valley. Donna, what's your question?
Hello. Yes,
Hi, Donna.
my question is, I'm wondering if I could get some support from your panel with regard to postponing foreclosure on my house, which is up for short sale. I completed an application, application to get the bank to approve a short sale based upon my hardship, which wasn't financial. Actually, I have a environmental health condition in the community I live that impacts my home, and it was impacting my health severely. So I had to leave the home, and I initiated this short sale, and with support from a realtor. And recently, I just received a letter in the mail saying that my application had been stopped or disapproved.
Donna, that's the key. Did the bank approve the short sale agreement?
Well, that's the thing. I've been waiting since May for the approval to come through. There was no contact from the bank to me, nor to my realtor, as far as I know, asking for any more information on the application or approving or disapproving.
And it sounds like...
And then suddenly I got this letter.
And it sounds like, Donna, the sale is proceeding. Is that right? Your foreclosure is proceeding?
I'm sorry, would you...
Your foreclosure is proceeding, Donna?
No, there's been no notice of foreclosure yet.
Okay.
I don't want it to foreclose. I would like to complete a short sale. I'd like to see the house sell. And,
so you just need communication from the bank, is that right?
Yes, I spoke with them today, and basically they told me that the workout program that their bank was using was debunked, and so that's why they really they went on and closed my application, because of their own program that had closed down. Okay.
All right, Donna. So it sounds like she mentioned that she didn't get information one way or the other, but I caught that they did not approve her short sale. And that's not a homeowner option unless the bank does approve it. Is that correct?
Yes. A lot of people think that they could just apply for a short sale, but in order to get a short sale, you need to show a hardship. And then it goes back to what we were talking about earlier about the investor's guidelines. If her hardship does not meet the investor's guidelines, then they have the right to say, no, we're not going to proceed with, or we're not going to offer you a short sale. Now, if you could put a case together and have somebody as an advocate there that could maybe put documentation together, maybe something from her doctor explaining what her hardship is, how she can no longer stay in the house and she can't afford that home plus the home or wherever she's at now, then that could be something that could be worked out. But the key is to find out why they said no and addressing that.
Okay. Let's go out to another caller. Let's go to Paris. Caroline, thank you for waiting. What's your question, Caroline?
Thank you. I was saying that.
Yes, Caroline.
I was saying I should turn my TV down.
Yes,
I was
please.
saying that I called a.
Caroline, listen into the phone and not to your television.
Oh,
and all our callers
okay.
should do the same because there's a delay going out to your television, and we want you to engage with us.
Okay, I called a company, SCME, and he told me to bring my driver's license. He told me to bring my tax statement, my last one, Social Security card, a utility bill, my checkbook, my.
And Caroline, who was this?
Yeah, this was the person I talked to at the company for the modification.
And was it a company that ultimately asked you for money?
No, they haven't asked me for any money yet because I haven't set up. But he said he had to set up a appointment so his lawyer and the loan officers would be there.
Okay, so what's your question for our guests?
Okay, my question is, I told him how much my bills were because I had lost my job last year. I'm only 4 days behind in paying my house note every month. So what I wanted to know is can he ask for all of that, and can he help me any at all? Because my house note only leaves me about $50 left out of the month to spend.
Okay, great question, Caroline. Thank you. Since you do counseling, you would know what people are supposed to bring to an accredited HUD-approved counseling session. Did it sound legitimate to you?
Except for the checkbook.
Except for the
checkbook.
Exactly.
Yeah, we're not gonna ask you to bring any checkbook.
No,
and
no.
I would suggest to her before she were to go and pay for any services, seek the help of a HUD-approved nonprofit housing counseling agency first. There's several in the Inland Empire where she could go. We will not charge for our services, and it's just become a real problem with these companies that are charging. And actually, I'm going to use this as a forum and just say, do not pay for foreclosure services. I went on Craigslist before I came here today, and I just want to read a couple ads that were on there regarding, become a loan modification specialist. No industry experience, earn up to 6 figures. Those are the taglines. Make $7,000 a month plus bonuses. Subprime broker shop experience is a plus. So pretty much if you used to be a subprime lender and got people in this, you're going to be perfect for us. Maybe you could call your old clients and bring them on, and we could pay you for it.
And this is the new booming industry
Yes.
of charging people to assist them with their modifications.
Yes, and here's the last one, and this one really got to me. We pay $800 if you charge $2,995. If you charge more, we'll split it 50-50 with you. So they're encouraging people to overcharge homeowners for services. And these are, an attorney firm, a loan modification company, offering the same services that we offer for free. Nothing, not a dime.
Okay. Now, in this particular case, though, with Caroline, isn't it possible that the person wanted Caroline to bring her checkbook so that she could look at her check register and construct a budget out of that, as opposed to write a check to me and give me money?
Well, we wouldn't want to assume anything, so it's always best to get all of the information from that person. Don't volunteer any information of yours, particularly any personal information. And that way you can take it to a housing counseling agency, have a specialist look at it to see if it's truly legitimate. But again, if there's any indication that fees are involved, you want to steer away from that. City of Los Angeles passed an ordinance recently that banned upfront fees for loan modifications, and it's going to spread. I mean, there's a $100,000 bond that people have to pay in order to even charge, or in order to be in this business.
Legitimately in the business, though.
Right. So go ahead.
We've had the chief of the assistant district attorney for San Bernardino talk about real estate fraud, and the FTC attorney was there too. There's a lot of people that are springing up, that are taking those upfront fees and aren't legitimate, but they know that it takes a while for justice wheels to turn.
If you think about how much money could be earned at 3 people a day charging even $1,500 per homeowner with Fridays off, you're looking at a $45,000 per month income. It's a very lucrative business, very attractive to many people that may have had some of this experience in their background. So people have to be very suspect of anyone that is not HUD certified and approved, or someone who isn't legitimate and asking for their business.
You know, just one more thing. I can't think of any other industry besides attorneys where you pay with the hope of getting the result that you want. You know, I understand how it could be a legitimate business if you go to a modification company, they assist you, they give you a modification, no fees, no nothing. But if I get you something that you agree upon, then, you know, I'll collect a fee. But they do not work that way because they do not know if they could get that modification or not.
Of course, and they're making the analogy that you pay for their time as you might pay for a CPA or an attorney.
They'd be sitting at home anyway.
I'm going to jump to other calls. Let's go out to Palm Desert. Robert, thank you for waiting. What's your question, Robert? I'm going to jump to other calls. Let's go to Palm Desert, Robert. And Robert, do turn down your television, listen into the phone, and we'll have a much more interactive conversation.
Thank you. I am going to register for the foreclosure homes, that the auctions that they're going to have in March. Now, my question to you is what your thoughts are on that, and also, once would you suggest me taking this 8-hour course before I get into? I know it's getting into the real estate business a little different than most people do, but would you suggest that? And also, how difficult is it to get a loan, like a line of credit, once you become a homeowner to these? Let's say I purchase, I'm able to pay the back taxes on this property, and how quick can I get? Because I spoke with my bank, and she said, well, you almost have to have very, very good credit. It's a reputable bank, but there might be a way where there's another institution where they might loan you the money, considering that your credit is all that great. So what are your thoughts on that? And thank you both,
thank you, Robert.
Lisa and Jesse.
Go ahead.
Well, there's a couple things that he brought up that I would be cautious of. First, I would say if you are interested in attending a first-time homebuyer workshop, then we would definitely encourage that, because that's going to give you some great understanding, and we'd probably answer the questions that he just asked in more detail. But a couple of things that I would watch out for is I've been hearing that these companies that are doing these auctions are not really that reputable themselves. They charge homeowners or potential homeowners to go in to bid on these properties. They get everybody all pumped up bidding on these properties, and they say, okay, you get the property, go off. That you paid your fee or whatever to enter. Now we got to see if the bank's going to approve it. And they go to send it to the bank, and the bank says, no, we need X amount of dollars, and they don't get the property that they thought they were getting. So I would be definitely cautious of that. And with the home equity line of credit, I kind of got the sense that he was looking to, I don't want to say capitalize, but he was looking as a business opportunity maybe to purchase a property, get out a home equity line of credit. And I'm just saying this because he did mention it looks like a good business. To get a home equity line of credit, maybe purchase other properties. That's something that in this market, it seems like it'd be tough to do because, number one, the values just are not there to pull out a line of credit.
But Jesse, I just saw an infomercial at 2 a.m. this morning that told me that I can make a killing in foreclosure market. I want to get into it. Help me out.
Yeah, we'd have a nation full of millionaires. If it was that easy. It's unfortunate, but there are infomercials that do get people enthusiastic about going out, and they have a theory that they have a concept in theory it might work, but in reality it's not that easy, and there's a lot of obstacles. And I would suggest finding out some more information from an 8-hour workshop where you're going to kind of get the nuts and bolts of how things work, and you'll kind of understand that it's not that easy just to go out and purchase a property and pull out equity and go and buy another property and things like that.
And to be fair to Robert, and I don't want to dissuade him actually from getting into the opportunity, housing prices are low. The problem right now is that you're probably going to pay fair market. He mentioned where you only pay back taxes. I know that that's been propagated. Most of the people are buying low just at the foreclosure auction price, which is what the market will bear. And there is an opportunity, but there's not enough equity to be able to pull out any kind of credit in this market.
Yeah, there really isn't that opportunity. I have actually heard about that, and that's probably why you made reference to the 2 a.m. Pay back taxes and own a property for for that amount. I'm not too familiar. I've heard of them. I've never seen any success stories. Maybe they're off in the Bahamas because it worked for them, but I haven't seen anybody actually use those types of systems and move forward with their lives.
Okay, and I'm going to jump out. Let's go to Simi Valley and go to Teresa. It's your call. What's your question, Teresa?
Thank you. I am in the process of modifying the loan on my house. I lost my job for 4 months. I am working right now. I just breaking even. But the bank asked me for the purchase contract and asked me for closing statement and asked me for how much I qualify on the loan. Why they need this for the loan modification?
Good question.
It
Lisa?
may be that she's not talking to the right department. Oftentimes you're talking to a call center, a different person every single time you call. It's important to go through the right channels. And I would encourage, talking with a housing counselor. If you are zeroed out after paying all of your monthly expenses and all of your monthly debt, and you have no money left over, but you have no deficit, you're really a good candidate for us to negotiate with the lender on your behalf. So I would definitely try a different route from what you're doing. Don't talk directly to the lender. Have the appropriate third party, which is a nonprofit housing counseling expert, mitigate loss for you on your behalf.
Because we have had other counselors say, don't be afraid, stay in contact with your banks. Don't cut off the communication.
Don't cut it off. That's right. We encourage homeowners to communicate with the bank, but involve us in order to help them.
But generally, I've heard, avoid the collections department.
Right. Well, that's where a housing counselor can help a homeowner, because we can navigate through those channels. And once the paperwork has been submitted, once contact's been made, then it's going to go through the appropriate channels. Then, if they're just late and delinquent or even in default, collections' job is to get a payment. They're not there to find out how bad the situation is. Really, they're not there to care. They're there to make sure they collect so many payments before the end of the day.
Okay, so you're saying once that third party has established that channel, helped you submit the paperwork,
right,
then you'll have a contact person that you can call,
right,
and the right conduit.
And they can always get on the phone with the counselor and do a three-way call so that that conversation and the outcome is much better.
All right, let's jump out to Upland. Angelica, it's your call. What's your question?
My question is, we tried to refinance our home twice already, and both outcomes was where they told us that they could go ahead and defer a portion of our mortgage payment. But then on the sixth payment, we would have to do a balloon payment. And it's outrageous, a balloon payment of $10,000 we can't do. Our income has changed. And so we've been struggling to make the payments. We do have a home that we are renting. It's a rental that we have. And so now we're to the point where we feel that we can't get help. So we're considering on doing either letting the home go to foreclose or try to do a short sale and moving back to our rental home, our rental property. If we were to move back to our rental property, would the bank put a lien against our rental property?
Good question.
That is a good question.
Okay, in this case, the rental obviously is going to revert to being the primary. If she would let the first one go, there's no recourse against the second loan. Is that true?
Generally not. I mean, we don't make assumptions with the lenders according to whatever guidelines they have. But if that that mortgage forecloses, and depends on what type of mortgage it is, if there's a deficiency judgment attached to it, if there's a second lien on there. But generally, once it forecloses, there's not going to be a lien on her rental that she's moved into, because that becomes her primary residence. I hesitate to give a lot of detail in a situation like that, because it really does depend on the mortgage contract and the investor guidelines.
Without giving her specific advice to her case,
Right.
isn't it a safe assumption, though, if you own two homes, that the lenders that are foreclosing against one home, they are limited to the assets of that one home?
Exactly, exactly, because there's a mortgage contract associated with the other home, and the two are not intertwined.
That changes if you have a HELOC, though, right? If you get a home equity line of credit, and you've made the personal guarantee, then all of your assets are fair game. What's the limit there?
What I like to let people understand, or try to express to people, is that a first mortgage is usually tied to your home. It's tied to your house, and that's it. Second mortgage, if it's a fixed second, a purchase money second, then that's usually tied to the home as well. You got to think of a home equity line of credit as like a credit card that is using your house as collateral, just to make it real easy. So a credit card ties to the homeowner and the home as collateral. So if you default on that, they can come after you as if it was a collection. And we know that it's an issue out there, but we do avoid that in giving that type of advice to a homeowner. We do advise them to talk to their CPA or the proper person to get that kind of financial advice.
Okay, now we're running out of time, and every single line is full. So we're going to fast fire some questions, and we're going to get to our callers. So be prepared listening to your phone. Give me the short answers for everybody, but as good as you can. So let's go out to Ontario. Robin, what's your question? Robin, are you there?
Hello?
Hi, Robin. What's your question?
Oh, my name's Debbie. I got a question about approximately how long it takes. I went to Inland Fair Housing with all my paperwork, my hardship letter. I'm applying for loan modification. And Fair Housing helped me. They were great with faxing all my information. I'm just wondering, how long will it take for them to get back to me, for my bank to let me know how long, before it happens? Do I contact them? Do I follow up again, or what do I do?
There's a 45 to 60-day process for loan modifications. We encourage the homeowner to call once a week. Check with your lender once a week, and the housing counseling agency or your counselor can communicate with you and keep you informed as to the status. But they would like to hear from you once a week, just checking in to see what the status is. They like to hear from homeowners as well. And about 45 to 60 days before the process is complete, although it could be sooner.
Okay, thank you.
And we've actually had, the Obama plan, they kind of know right then and there if they're going to qualify, so they'll kind of give you an answer over the phone. So sometimes it is the longer period, and sometimes it's like, okay, just, you fit in the program, so let's go ahead and start it right now.
Great. Okay, and we went to the wrong Ontario line, so thank you for waiting, Robin. Are you there? What's your question?
Yes, I'm here.
Hi, Robin. What's your question?
I have been ripped off, and my son has been ripped off. We're trying to get a modification, but everybody we go to wants $3,500. We gave $3,000 to an attorney. He has moved. All of his lines have been disconnected, and I went to small claims court and filed a small claims court action. Don't have an address to serve him. Then we went to the computer. Better Business gave him an F, and then they have 5 lines on there that says rip off, rip off, rip off. What I'm asking tonight is a number that we can call and get a modification.
Okay.
And don't have to pay $3,000.
Thank you. That is an excellent question. We have talked about you are one of the many nonprofits that offer credible, trustworthy modifications for no fees. So let's mention your organization again, and I'll just let our viewers know that we're going to put your website on the website where we discuss the Southern California foreclosure crisis. So when you go to kvcr.org, you'll see a button that says Facing the Mortgage Crisis, and when you click it, you'll get to our initiative site, and we'll have you up there within a couple of days and the link. So tell us your organization again and the website real quick. And again, you don't have to write it down. And then I want to let people know where they can find others equivalent to you.
Right. We're Fair Housing Council of Riverside County Incorporated. And the phone number is 951-682-6581. Our website is www.fairhousing.net.
Fairhousing.net's easy enough.
Yep.
And the others that people can find, both on our site, we have a list of 7 or 8 that we've worked with, and there's also a list for all of California at the HUD.gov site.
Correct.
And those are the only people that people should go to. You would think that you could trust the lawyers. You would think that you could trust the attorneys, but it's turning out that, like you said, the greed is overwhelming a lot of people. They're taking the money and running.
Yeah, there's with every industry, there's the good and the bad.
The good and the bad,
and the only way to avoid the bad is just not to go to either one.
Okay. Now, let's take another call. Let's go to Pomona. And I want to say it's LaWanda. LaWanda, what's your call?
Yes, hello, good evening. Hello?
Yes, good evening. What's your question?
My question is I try to do my modification by myself, and could I say the bank name or not?
Sure.
Well, I was trying to do it with Chase, and I had got this guy to do it, John Duchette, and he was telling me he didn't care what Barack Obama had came up with or anything like that, and he stuck me with the same payment. So I didn't know what to do, so I had went to the Fair Housing up here in Upland to try to get things done. First I went to them, and they went, and all I became was just a number to them, and I didn't get nowhere with them whatsoever. They told me I can call anytime for help and to set up a counseling where I can call the bank, which it never did come into play.
So the question is, how can they better engage the agency? Do you have a branch in Upland? Are we talking about your organization?
Well, we don't have a branch in Upland. HUD's website may find a housing counseling agency closer. We're located in Riverside, and we can see people outside of our county to a certain percentage. But Chase actually does have a program with the Obama administration, Making Home Affordable plan, and we know what those guidelines are. So she may have been talking to someone who was either newly trained or wasn't trained, and it's maybe a matter of her going to a housing counseling agency that's working more directly.
Yeah, there are Fair Housing Council of many different cities, but we're not affiliated with them at all. And I would say to engage, maybe ask for the program manager or the executive director if you need to get to that level. But for the most part, it all is on an individual basis. She might have just had a bad.
But
experience.
I will say that the bad experiences that I've heard about from viewers, pretty rare. There are other agencies. Engage a different agency since they are at no cost, because you will at least find out if you qualify.
And I say the same thing
I'm going to cut you off and take another call. I want to take one last call, and let's go to Victorville. Rosie, thank you for waiting. What's your question quickly, Rosie?
Hi. Actually, I went through a loan modification back in December of last year. And I made my new payments. I got approved. I made my new loan modification payments. And back on the 13th of this month, I received a letter saying that my loan workout was denied. So I called the bank, and they told me that they went ahead and went back and denied my loan modification. Can the bank actually do that, grant you a loan modification, and then take it back?
Sometimes a loan modification is denied after it's been granted if the terms were not met. There's a small window of time that has to be adhered to get that paper sent back in. So
the trial term, 90 days usually.
Or even a certain period of time to sign it and get the loan documents back so that it can be initiated. So depending on that person's situation, it may be that they didn't get the loan documents back in time. But usually it wouldn't be just denied for no reason. It would be denied because something in that contract that was sent to her was not met, or they didn't meet that.
So in your experience, it is unusual for somebody who's in a trial modification period to see then the entire modification denied if they've met the terms.
If they've met the terms. If they missed a payment or if they were one day late on the payment, then it could kill the deal. But usually, that modification, if the terms are met, will go through.
Jesse, quick closing comment.
Or if they maybe gave verbal information over the phone, and when they faxed in their bank statements or paycheck stubs, it differed from what they told the representative over the phone. That could be denied on that basis.
That's
All right.
Yes.
I'd like to thank our guests, Lisa and Jesse, for joining us this evening, and thank you to the viewers for watching. If you'd like more information about tonight's show, be sure to go to kvcr.org, click on the Facing the Mortgage Crisis button. Please join us next week. I'm Roger Bowman, and remember, it's your call.
For more information about this project and related topics, visit kvcr.org and click on Facing the Mortgage Crisis.